How are you guys doing? This is Ryan and Miles. Welcome back to the channel. Today we're going to be showing you a new piece of property we're looking to buy here in our same neighborhood. I'm looking to expand my real estate portfolio to $1.4 million. And in this video I want to show you the property and go over the economics and the finance reasons and a lot of different tips and tricks to buying new home build construction. So let's go jump in the video. Alright guys, it's really sunny, so I'm sorry if my hat is like blocking my eyes. I'm not trying to be rude. It's just super sunny and I can't get the shade to hit my eyes right. So anyways. So yeah, we just bought a house in our neighborhood just over a year ago, and I bought the house with the intention of renting it. You know, the way we did our upgrades, the way we costed everything out, it was to be a rental. We love our home, we love our other home that we owned before that is now a rental, and it's time to move on. I'm not someone that gets attached to a home or wants to have a forever home. I view real estate more as monopoly, and my friend Gen X had a great quote. I can't remember who said the quote, but someone in his Discord said that life is a lot like playing Monopoly. And could you imagine playing Monopoly and not acquiring any assets, just going around the board collecting your $200? And that really hit home with me because a lot of people just go around the board collecting $200, and there's nothing wrong with that. I think there's something beautiful about people who have content in their life, and for whatever reason I have like this existential anxiety that time is finite and I want to do cool things, you know, I want to attempt things. I'm not scared to fail. I'm not scared to take on a lot of leverage in real estate, over $1 million in leverage, and I'm doing my best to alleviate my downside risk in doing so. And we're gonna go over why I don't think it's a bad idea to leverage real estate if you do it the right way. So if you look over here, this is the home we are looking to purchase. The home is 3,300 square feet. Our current home is 2,300 square feet. So it's a bigger home, and it'll accommodate our family better, as you know, we have 2 kids now, we have multiple vehicles, they have their toys, guest rooms for when family come to visit. But also this home is not a forever home for me either, you know. I want to make money on this home, and that's essentially why I'm buying it. The last home I purchased that I live in now, it's already appreciated $100,000 in equity value in just over a year's time. That is the power of leverage. I only put down 10% on that property. I put down, you know, roughly $50,000, and I got over $100,000 return in just a year. And now I own a cash flowing asset that'll likely continue to appreciate. I live here in South Florida. I'm very bullish on South Florida and Palm Beach County in general. I think Florida is very attractive for people moving here, low taxes, great weather. Yeah, I don't know why people put up with high taxes and horrible weather. So I think the trend of Palm Beach County real estate continuing to go up is very highly likely. So I want to own as much dirt here as I can. And if you look throughout time, real estate appreciates by roughly 3%. So if I own $1.4 million worth of real estate, and in just appreciation, I will make $42,000 a year on average. Don't get me wrong, some years it may go down, some years it may go up, but I guarantee 10, 15, 20 years, I'll have at least an average return of 3%, if not better. What I've been able to do is I've been able to do better than that because I'm buying houses under market value. I bought my first home at $230,000, and then it appreciated over $100,000. And then I was able to cash flow it and do a cash out refinance, access that equity for more investable income. The house I'm living in now, I knew I was buying it in an emerging market, and I knew by not going crazy on upgrades that I would create a lot of equity value. Instead, my wife and I, we just did do-it-yourself at home things to make the house nicer. We did shiplap, we built a nice entertainment center, we put in a range hood, we did a lot of things through her YouTube channel that we actually got paid in videos to do and improve the value of the home. They're working over here on the house, building the second story now. Hey guys, can we check out the house? Can we check out the house? Oh. All right, they're gonna let us walk through. So I'll give you a little bit of a tour in here in a second, but I wanna finish my thought. So by controlling real estate, you get that appreciation over time. You get dollars are depreciated, and demand can outrun supply, which is happening. There's more demand to live in South Florida than there are houses being built right now, and that's a very good sign. But also, one thing I love about real estate is how cheap borrowing money is. You can get a 30-year mortgage now for under 3%, which is incredible, incredible. And I personally think inflation is gonna be more expensive. I think inflation will pay off these mortgages for me with how much money printing is going on and how suppressed interest rates are right now. But on top of the appreciation, I'm gonna be cash flowing 2 properties now. So I'll have roughly $10,000 to $15,000 a year in passive income. And I'm also gonna have principal pay down. I'm gonna have people paying down those other mortgages for me, and that's gonna be roughly another $10,000 a year, including this home. I'll have to pay this one. But that's like a forced savings account in my pocket, and that's liquidity I can access in the future if I want to sell the home, or do a cash out refinance, or do some kind of equity line of credit. I'll be able to control that wealth in the future. So for round numbers, I'm getting about $42,000 a year in appreciation. I'm getting roughly $20,000 a year in passive income and principal pay down. So that's $62,000 a year. I'm not a tax expert, but you can depreciate so many things with your property. You can depreciate the value of the home over 27 years. When you have rental income, that's a business. You can write off different things for that. So I would throw in the tax benefits of at least another $10,000. So my real estate portfolio, I think to me, in terms of net worth growth, will roughly accumulate $70,000 a year. Guys, that's powerful, that's powerful. It's money I'm not really working that hard for. These are assets that I'm taking my active income and I'm putting them into hard assets so I can increase my wealth. Now I know a lot of response my wife got on her YouTube video was that like it seems exhausting. You're moving your family around every couple years. You know, your other home is so beautiful, but that's just not the life we're choosing. We're choosing a life to overcome challenges. Like I find it fun, I find it exciting. Like this is really a game. Like I said, this is like Monopoly. You have an opportunity to do whatever you want, and like don't let the fear of failure holding you back. Like, yeah, I'm gonna have over $1 million in mortgage debt, but there's so much upside potential there, and the downside risk isn't that low because these houses are gonna rent. These houses are appreciating. These things have been going on for a century now. What are you really scared of? I'm gonna let Miles wear my hat. You don't wanna wear it? But when you get into this being on offense and building wealth mentality, like I'm not even scared of like failing. If I like lost everything for some catastrophic reason, I feel like the skills I've learned to build wealth are gonna be with me moving forward, you know, and I think I could rebuild it much, much faster than I did the first time. So I don't let the fear of failure or things going wrong stop me, because at the end, we're all going to the same place, you know? We're not getting out of this life alive. So I encourage people to have fun and go after things. My battery's gonna die actually, so I'll just give you a quick tour of the house. So let's do this real quick. All right, so front door is right here. So you're gonna hear a lot of noise, they're working upstairs. This is the little office area. So we'll do like our YouTube stuff in here. Sorry, the lighting's not the best. Yikes. And then there's a bathroom over here. Followed by we walk into our kitchen, will be somewhere around here. And then an island. And then it has like a longer run here. The dinner table will be somewhere around here with a living area here. And then down here, we have the master area. This will be the master area. And all the rooms, well, 4 more rooms upstairs for the kids, for guests. There'll be a big giant playroom. It's gonna be cool. Stay tuned on the channel, make sure you're subscribed. If you enjoyed the video, give it a thumbs up, and we'll follow this whole journey as it goes. We'll talk more real estate, we'll talk more building wealth, we'll talk about all these different things. Make sure to follow me on Instagram too. I'll put my handle here. And I'm making this video kind of quick because I'm traveling this weekend. I'm going to visit my in-laws in Rochester, New York. But as always, guys, I appreciate all the love and the support and want to hear your feedback in the comment section. What are you doing to build your wealth? What fears are stopping you from holding you back? Is there anything that you're not doing in life because you're scared of failing at it? And if so, how can you mitigate that downside risk and still take calculated risks to have fun at this game? We're just playing Monopoly, right? So anyway, I'll see you in my next one.